Okay, hello and welcome. My name is Andy Demi. Welcome to tonight's webinar with Capital Market Elite Group. Today, we're going to be speaking about which stocks could drive 2024 in the fast lane. Okay, so if I can get a quick audio check, let me know you can hear me, and also if you can see my screen, and we are going to get started. Okay, whilst you do that, please note that you are more than welcome to ask questions as we proceed, and I'm also happy to take requests if anybody has any in terms of stocks that you'd like me to look at. Okay, let's just check everything is working okay. It looks that way. Wonderful. Okay, lovely. Okay, fantastic. So with that in mind, guys, very, very important that we begin with our risk disclaimer. Okay, please take a minute to read through this. It's important that you understand that financial trading carries risk. Okay, obviously we are all going into the markets with the intention to make money. However, there is no guarantees, and everything that we do and everything that we teach is for purely education purposes only. So be sure to understand that trading carries high risk, and it should only really be done with money that you can afford to lose. Okay, so I assume everyone is good with the risk disclaimer. You understand the risks associated with trading. So now we can get on to the more fun stuff and actually look at what we're going to cover and then go straight into the live markets. So here's the agenda. Tonight, we're going to be speaking about how to use trend analysis to determine the stocks most likely to remain in a bull market. Advanced indicators to gauge momentum and uncover the stocks garnering the most enthusiasm. Professional techniques to spot indicator divergences and ensure convergences stay in place. And finally, risk management strategies for trading volatile stocks with outsized upside potential. So with that being said, we are going to move into the live market in order to take a look at some stocks that I am looking at, and I'm going to show you how to break these down. Now, what's more important is not the particular stocks that we're going to be looking at, but what's more important than that is to understand the process. The process is what can be repeated for any stock. So that's going to be my intention, is to give you repetition of the way that I would look at the markets and how I would go about timing the markets. Okay, and we're going to look at all sorts of different stocks. Now, to begin with, one of the things that I recommend is to be familiar with what's happening with the broader index. So, for example, we're going to take a look at the S&P 500. And we're also going to look at the NASDAQ because I'm particularly interested in tech stocks. I believe right now that AI is going to be the #1 driver over the next year or so. Okay, so that's where I think there is a lot more upside potential. So I'm going to show you some stocks that are really taking advantage of AI. But of course, there'll be other stocks as well along the way. So let's begin by looking at the S&P 500 to see what the broader index is doing. Now, whilst that's loading up, it's just loaded, you can see here that we have different time frames that we can look at. And right now, this is on a daily chart, okay? Now, we can also go to a much higher time frame with something like this, like the monthly chart. And that just kind of gives you a bit more of an idea of what's happening on the monthly chart. So let's firstly familiarize ourselves with what you actually have here on the chart. Okay, so the first thing we have is the moving averages. So here in green is the 200 moving average. And you can see this market is very, very far away on the monthly chart from this. And then we have the 50 moving average, which is here in red. And then here in blue is the 21 moving average, and here in yellow is the 8 moving average. Now, one of the things to note is, are these fanning? Are they aligned? Well, in this case, they are, because you have the 8 above the 21 above the 50, and the 50 above the 200. Also, what's important to know is that they are all pointing upwards, which again is really, really bullish. Now, these purple lines here, this actually represents an envelope where we are looking at 1% above the price action, the 1% below the price action. So let me show you exactly how that works. So if we go over here, you can see we have taken the 10% above, sorry, it was 10% above and 10% below the 10 moving average. Now, you can adjust this a little bit. You can also look at something like the 20 or whatever, but I quite like, I'm going to actually change this to the 8. How far away is it from the 8 moving average? Now, basically, if you see the price towards the top end, then you're kind of limited in the upside, so you just got to be a bit more cautious. Right now, you can see we're kind of going towards the top end. You can see in this scenario here, this market really did sort of just hug this and stay up there, so that can also repeat itself. The other thing I really like here is we've actually had recently a MACD cross upwards, okay, right at the 0 line, which is very, very bullish. And then here it tried to kind of cross below, but it didn't manage to, and it stayed up. So this is very bullish for the S&P 500, even though we are, we've been climbing and climbing and climbing for years, and everyone's been kind of waiting for a bit of a crash. At the moment, it's still looking very bullish. Now, I am going to go into the daily chart. I just want to see if there's any hidden weaknesses here where we might expect a pullback. Okay, so let's have a little look. So right now, I just can maybe make this a little bit bigger. We can. Well, what I can see immediately here, we just take our trend line. You can see that the price is moving up like that, okay? And then you can see that at the same place, the MACD here, okay, is moving. Oops. Let's try again. Otherwise, I will use my, what's going on here? Right, let's use a freehand pen instead. Let's do that. So, price moving up, MACD moving down, like that. Okay. What about the RSI? RSI moving down. What does that mean? Well, it basically means that right now there is some hidden weakness and that this market might pull back. Okay. Also, what you can see here on the S&P is that we are overbought on the RSI. We're above 70. So again, another indicator that we could be pulling back down. So let us now have a little look to see where this could pull back to. So I'm going to just make these a little bit bigger, a little bit smaller. Okay, so I'm actually going to go down to a lower time frame just to make this a little bit clearer. We can see the candles a little bit better. Okay. All right. So the question I would always ask is, well, where is this pulling back to? Okay, so when you look at the this is the hourly time frame, so I'm going to go up a little bit. Let's go to the 4-hour time frame. So this is going to pull back. Question is, where is this already pulling back to? Well, you can see here that we've been pulling nicely to the 21 moving average, which is around here. So that's not much of a pullback. And then what we can do is we can adjust this envelope here. So if we take this envelope, and since we're using a lower time frame, we probably won't need such a big percentage. Let's see how that looks with 5%. And what I'm going to do is I'm going to fit it to the market so that it gives us a much better, I think we'll go with about 2%, maybe it's probably enough. Will give us a much better idea as to, yeah, that's a lot nicer. Where might be some value for us to potentially, you know, start looking for the overall market to go higher. Let's do 1%. Let's try that. That should be, yeah. So anything kind of near this purple line or below it, which is around there, is looking like, so this area here between the purple line and the red, which is the 50 moving average, I think between 480 there and 478 on this S&P 500 ETF looks like a decent area. Now, what I can also do is I can draw a horizontal line here, just like that. And that again is indicating, you know, that's a bit, oh, hold on. That there. Yeah, it's right really nicely in that area then. The old resistance here becoming future support right there. So I think that a little bit of a pullback there, and then I think that this market's going to continue to go high. And you can see already there is like the RSI overbought here on the 4-hour time frame. So it looks like, you know, we're going to at least either pull back or potentially go sideways right here. So maybe there's going to be a little bit of consolidation here on the S&P. Now let's also go and have a little look at the NASDAQ and see what that's looking like. So we'll go to the big time frame. Let's have a look at the monthly chart. Okay. So let's have a look and see what's happening here on the monthly. So this is interesting. This is a really nice position. This to me looks like it's about to take off. I mean, look at the MACD right on the 0 line. This is exactly what you want to see, by the way, where the market goes sideways and then the MACD pulls back. It's now ready to cross the 0 line. It looks really, really nice. Look at the moving averages, really nicely aligned there. That looks to me like it's ready to get to pop here. You know, you've got to think, wow, this has been since, because it's a monthly chart, 2021. Wow, it's really not done anything. So start 2021, we were around sort of a high of about 71, and it's now 58. So it's at a very, very nice point, I think, the NASDAQ right now, for this to push higher. So let's go and have a little look at some individual stocks to see where there might be some opportunities. So I'm going to start with Apple. Now, Apple really does look really great on the monthly chart. Okay. Now let's ignore the envelopes. Let's, in fact, we can change this back to 10%. Okay, sticking with the higher time frames. You can still see though that, I mean, this actually goes higher than 10, like it looks like it's not even enough. So let's do 15% on this one. So it's moving a lot more. And even that's not enough. It's even here, it went above that. Crazy. So let's do 20% then and have a little look at that. Okay. Okay. Well, I mean, even here, it went above that, but that will do for now. Again, look at this. The MACD's crossed above. This is really nice. It's not as low as the NASDAQ itself, but this looks really nice. Looks like this is ready to pop higher for me, Apple. Hasn't done much for a while, but it really does look like it's ready. So what I'm going to do is I'm going to just try to see if I can make this a little bit bigger. So hold on, let's make the chart a little bit bigger like that. Okay, so this is the daily chart. What I'm going to do is I'm just going to clean this up so that we can have a little bit more space here, so we can really one second there. It seems to have okay, done. Right, okay, perfect, that's better. So now we can actually really look at this chart and do some analysis, find some levels. Okay, so let's do some technical analysis here. So here's what we're going to do. We're going to identify, I don't want any labels, and we can change this to maybe black. Okay, and then we're gonna use this one. Okay, and then we will draw again. I want to keep this as black. Okay, so we've broken out through here. Now, if you have a little look over here where we are, you can also see that we have recently, I'm just going to stick with the purple for now because otherwise it's going to take a little while to keep deleting that. But I'm going to draw, I want to draw, and we've got really nice, we've got the 200 EMA, which is our dynamic support here. But I also want to draw a support line. So I'm going to scroll out and let's see how far back we can go. In fact, I'm going to go to the weekly chart just to make sure we get it absolutely correct. And this is how we're going to draw your trend lines. So we're going to go to the lowest point, we're going to connect a point there, and then we're going to go from that last touching point. We're just going to draw from there, and then we'll draw the next inner trend line from here. We'll go up until it touches, and then we'll go here. There we go. and we're getting close now. And then here is the last support line. And you can see there that we haven't quite pulled back to it. This looks like a really, really nice zone because you have the 50 moving average where, by the way, if you can see over here, we were below it. We were pointing down. Notice how the 8 was below the 21, 21 was below the 50, and then look how they've all turned. And then since they've all gone above, the market started to go up. And they are still all above. So 8 is above the 21, 21 above the 50. We've had a nice move up there. We are still in a bit of consolidation here. So I'll just show you what I mean. Like here, the market is still basically going sideways. So you can either look for a pullback onto this trend line and this moving average for a value buy, maybe around that kind of 180 area, or we can wait for a breakout, and at that point we can wait for a retest, maybe at one of these moving averages, like maybe the 8 or the 21, before then buying for a move higher. But this kind of matches what I'm seeing on the NASDAQ, so this looks good for me, either around 180 or wait for the break above this kind of 201-ish area, then wait for a pullback into the 8 or 21, and then look to go long. Okay, so that's Apple covered. Let's go and see what else. Now I really like Microsoft, so I'm going to go to Microsoft. I mean, this looks so bullish, doesn't it? I mean, look at this. It's just, you know, again, they are really taking advantage of the AI narrative. They're really getting heavily involved in that, and that obviously is going to be very helpful going forward. So again, very similar to what we saw with Apple. You know, you can see that we had this down move. Okay, so here I'm just going to draw it freehand as well. And then here we kind of crossed above it, and look at this really nice strong bar. The 8 crossed above the 21, 21 above the 50, and then since then we've been rallying. And again, you know, I would be looking for pullback. So you can see the 21 is acting as nice support, and even look over here when it was going up before, the 21, i.e. the blue one, was acting as really nice support. Where is that? It's right here. Okay, so any kind of pullbacks into this area right now, so that would be around that kind of 360.22-ish, I think represents a nice opportunity to go long. Okay, and then if you're playing this as a bit of a swing trade, you can see when this market really moves up, notice how we don't break this 50 moving average. We only break this red 50 moving average once the market goes down. So for me, a really simple trading idea would be, you know, to be looking to buy this around here, and then a stop around here, and then, you know, target wise, I mean, we could use Fibonacci. You could do that. You can also use the envelope. I'm gonna have, I think it's if I have a look at the monthly, I don't think we've got any old levels, no. So in that situation, you know, you could use something like the Fibonacci to help, you know, with targets. Just clean this up a little bit. So I'm going to go to this, hold on, and show you what I mean. So if we take this high and low, the market has pulled back into this zone here, which is the this is the is that the 38? Hold on. Yeah, this is the 38.2. And so one of the targets we could go for is back up here, around 463, which is the 1618. So around 463.22. Okay. So let's think about this in terms of risk management. Okay. Let's see if this makes sense. So if we were to buy this at, let's say, what are we on? Let me go back to the weekly second. Yeah, so the 21 moving average. So if we were to buy this at the 21 around 362, and let's just say, keep the numbers simple. Let's say we were targeting 462. We are targeting 100 points. If we then placed our stop below, well, I did say, yeah, I mean, this is an exception where we maybe went a little bit lower. This was back in 2020. So I think the 50 moving average is still safe enough. So if we put our stop at 320, let's make the numbers simple. Let's say 322. Okay. So buying, let's write the numbers down. Buy at 362. Target at 462. Stop at 322. So in order to work out our risk, we are going to calculate the difference between the buy and the stop. In this case, it's 40 points. Okay, obviously times the position size that you're going to place, and then the target is the difference between our reward. Sorry, is the difference between our target and the buy point, which is 100 points. So what do we have in our favor? Well, we have the 21 moving average, we have an uptrend, we have, you know, the AI narrative Microsoft are really taking advantage of, and most importantly, we have a safe stop behind a moving average that doesn't tend to get broken when the market's moving in that direction. And then we'd have a really nice entry at an area that does act as really good support. So are we happy with this trade? Well, if you work out the ratio here, you are actually getting paid 2.5 times to 1. In other words, for every $1 you risk, or £1 you risk, you're going to make 250. Okay. So that is, in my opinion, a very good setup where you have the trend on your side, you have a really nice entry, you have a safe stop, and you are using the Fibonacci for your target, and you're getting paid 2.5 times more than your risk. So we have, in summary, we have probability on our side, plus we have a really nice reward to risk ratio. Okay, so I like this one. Microsoft looks like a good one to consider. Okay. Now let's go and see something else. Let's go and have a look at Tesla. Now Tesla is in a slightly different position, okay, because it has, you know, it's actually come back to a very nice support area. I actually think this is quite a nice value area. Like if I just show you this using our trend tools, in fact I'm going to do it with a triangle because it's easier to see sometimes. So look at this area here. Let's mark it down. So you can see that we are basically in this zone right now. And look how in the past, I mean, you could can make this a little bit bigger, but basically in the past, this has been a really nice base point of support. You can see we're also at the bottom end of this envelope that tends to eventually bounce. So I think this is a nice value play. You can see that the market is really pretty much staying in this zone here. And then, you know, on the flip side, if you want to do something short, well, it's not short term, but something like that, you could basically be looking to buy something like here and then looking to target somewhere back up there. So that looks pretty decent to me as a play. So Tesla, slightly different play, but I think it's a value play. It's in the range, nice support area. Let's kind of work out some numbers here. So we're currently, you know, and it's looking quite bearish right now, strong bearish bar down. So I think we could try and get slightly better price, maybe towards kind of 165. And if you notice back over here as well, notice how this was a really, really nice previous demand zone where the market really took off. So, and then since then, you know, this has now acted as a nice area where demand is coming back in. And I think that this area here represents decent value. If you were going to play this as a trade, you know, you could probably argue that maybe that looks like a safe stop. So possibly stop somewhere around this kind of, let's do the maths, 120, entry 165, target 280. So if we went 280, again, this is just like, you know, for education, I'm not giving you exact numbers here. You know, and also you should avoid the round numbers. I'm just doing this to make this quite easy and simple. So if we were going to enter here, stop there, that is risking 45 points. 280 minus 165 is 115. Okay, so remember our trade on Microsoft gave us a 2.5 to 1 reward to risk. Okay, let's get our calculator out and figure out what this would give us. So it would be 115 divided by 45. This gives us, again, 2.5. Perfect, exactly what we want to see. So I really like this one as well. I think this is a good play, sensible play, and yeah, I think this has a lot of potential. So Tesla looks like a value play, a little bit different to what we saw there with Microsoft. Okay, guys, I'm just going to take a breather. Let me know if anybody has any questions before we move on to some other ones. Okay, right, let's have a little look and see what else we've got on my watch list here. So these ones over here are, some of these are you may not have heard of, but they are AI based. Let's have a little flick through and see if there's anything interesting here. So Autodesk and Qualcomm looks okay. It's kind of like a high point there. This one is a very low point. Unity Software. Let's have a little look at Meta. Okay, let's go with Meta because it's moving nicely and this looks like a very nice trending pair. Okay, so, this is Facebook, now known as Meta. So what is happening here? So let's have a little zoom out. So we had a little bit of a blip. We did, we kind of had this all-time high of around 386. Market fell all the way down to 88. Wow, incredible move. And then it's now since recovered. And if you kind of look at, this was the this here was the key breaking through that, and ever since it's basically been on the trajectory upwards. It's taken out this high. Well, in fact, it's actually right on that high. So this is a tricky point for this stock because it's not easy to break these highs, and often this can end up being a double top, and then the market could go back again. So I would just stay on the kind of air of caution a little bit on this one. I would certainly at least look for a value area. So, for example, this sort of area here might make sense where you've got a little bit of support there. Hold on, let's remove that and redraw it. So you've got a bit of support. And then you've got this envelope here, you've got the 50 moving average. So if this was to kind of drop down to here, I think short term that looks like a good area. I would still be a little bit cautious and thinking, are we going to break through these highs? I would probably be more thinking about short-term ideas. So possibly around this kind of 293-ish area, we could look for buys, but possibly just short-term. So maybe targeting something like back. So maybe buying around here and then targeting just back towards this this high point over here might make a little bit of sense. Of course, we've got to make sure, where do we put our stop and so on, and is it going to be enough reward? So if we were buying this at 295, targeting 365, let me go to a lower time frame and see if that can make sense. 295 down here to 365 is about there. Where would our stop go? Nothing obvious here. I go to a daily chart. I mean, to be honest, I actually think looking at this area here is more likely around this kind of 300 area, which is the 200 daily, and then we've got this envelope here, which has acted as support in the past. So I think if you're looking for an extreme around this kind of 305 area, it looks like a decent area. And then one of the things you can do, it's a little bit more advanced, but I'm going to show it to you anyway, is using Fibonacci. What you can do is you can draw your Fibonacci from here, right? And then you can use these as potential target points. So for example, the 618 is the most common one. So this market was to drop from here, okay? So something like this, to have it dropped, and you said, okay, I'm going to buy it here at 300. You could target the Fibonacci 618, which would be right there. So that actually comes in similar to what I was saying, around 368. So buying at 305, I'm going to keep the numbers simple, targeting 365 gives you a 60-point target. Now, just to show you, working the other way around, If you wanted to have a reward to risk of 2.5 to 1, as we have been, then you can do 60 divided by 2.5, and that gives you a stop of 24 points. So let's go and see 24 minus, so 305 minus 24, let's make it 25 to make the numbers simple, takes us down to 280. So 280 would be your stop, roughly around there. I definitely want to be below this low there. Let's get our trend line and make sure that that would work. Yeah, I mean, it's just about, I'd probably go, you see like there's a bit of support here. I'd probably go a little bit lower, somewhere like there, 272. And, you know, you could potentially try and get in a little bit better. So let's go for 295. So let's adjust these numbers a little bit. We're going to try and get in at 295. We'll still target 365. And the stop's going to be about, we'll call it 270 to make the numbers simple. So we're trying to make 70, risking 25. That's pretty decent, and that's pretty close to 2.5 to 1. So 70 divided by 25. Oh, it's even better, 2.8. So that looks like a really nice idea. Again, can be used with a limit order, nice and simple, risk managed. You know, it's just kind of like literally a set and forget type of thing. Okay, guys. Any questions? Hopefully that makes sense. So we've covered Microsoft, we've looked at the S&P 500, we've looked at the NASDAQ, we have also looked at Tesla, and we've looked through a few more, and obviously we just looked at Meta there as well. Let's see what else we've got. So let's have a little look at Amazon. What does that chart look like? Yeah, so this is looking nice. Moving averages are fanning nicely. Looks like the 50 moving average, your value area, that's coming in right here. And look at the great area of resistance that becomes support. Let me show you to right there. Look at that. Perfect. That comes in around 148. Okay. Now, in terms of targets, we could have a little look at the weekly chart. Yeah, let's do some fibs. Let's take this, whoops, the other way around. Force of habit. Right. So A, B, pull back into the 30, into the 50 or 38, actually it is here, to the 38. The target on this one would be back here, the 1618. So this comes in at around 183. So let's go back to that daily chart. See how we're using multiple time frames here. So we're going to enter about 150. We're going to target 183. So 183, enter 150. Okay, that gives us 33 pip from entry to target, right? So again, let's work backwards again. So what if we want to do 2.5 to 1? We are going to do 33 divided by 2.5. That gives us a stop of 13.2. So we do 150 minus 13.2. That gives you a stop of 136.8. So again, let's have a little look to see, does that look like a safe stop? 136. Well, I've got the number now, but I think it's 0.2. So somewhere there, about 136. Enter here target there. So it's stop, enter, target. Looks pretty nice. So we're kind of hoping for this, basically. And what I like is that the fact that you've got the indices ready to break out, especially the NASDAQ, it looks really ready to pop. I like this a lot. I think this is a really good one as well. And I think that stop is safe enough to protect us. Okay, so again, another 2.5 to 1 on Amazon. Okay, let's remove that text and have a little look to see what else we've got. So let's have a little look at Google. Okay, I'm going to start with the monthly. So it looks like it's we created this high point back in 2021, but it looks like it's trying to break through it. But again, these are tricky ones to play. You know, there's a lot of time when you attempt to break a previous resistance point where it fails, and you could end up really kind of sitting in this for a long time trying to break through. So for that reason, I would probably stay away from investing in Google right now. If you like breakouts, the best thing to do is wait for the monthly chart, see if it closes above the previous monthly close, which is here, and then potentially you can look for pullbacks to buy. Little look at Netflix. Again, it's kind of on the upper part of its envelope. I don't think there's too much value there right now. So again, I'd probably stay clear of that one. Disney. I mean, this is a value point. We've been as high as 201. It's currently at 91. So, you know, it looks like a bit of a value play here. So, you know, potentially if you want to get it in at a better price, then somewhere around here, 91-ish looks like a good play. And then, you know, targeting these kind of this area up here, which has acted as good resistance in the past, but still looks quite achievable, can make sense. Or if you want to go for something that's, let's say, an easier target, that one there. So if you buy here and target there, that looks pretty decent. So buying around buying about 90, targeting 120 is 30. Again, if you want to use the sort of 2.5 to 1 ratio, you can do 30 divided by 2.5, gives you a 12 pip stop, so it will be about 72-ish. Oh, sorry, so this here is, so sorry, I've made a mistake on the numbers there. So buying around, hold on, let's delete this 1 sec. So buying about 70, let's say we're buying at 70, targeting back, let's say here, about let's call it 115. So 115.70 is 45 difference. So buying here, targeting here, and then 45 divided by 2.5 is 45 divided by 2.5 is 80. So that means we would be at 52. So about there. So let me mark that down. About there. Again, looks like a decent enough play. If it was to come back and then do that before stopping us out, again, 2.5 to 1. Now, something you might be wondering is like, why am I choosing 2.5 to 1? Well, you don't necessarily have to choose 2.5 to 1. You can go for 2 to 1. You can go for 3 to 1. You can go for more, right? But when you're playing these type of longer plays, something like, you know, when you're looking at the weekly charts, the daily charts, and you want to do swing plays where you want to put some orders in the market and you don't want to watch them and you just want to let them do their thing. Well, in that situation, because it's going to take some time, even getting filled is going to take some time. You need to be getting paid, you need to be getting enough reward for the amount of time that you're waiting. So if you're getting 2.5 for every £1 that you're putting in, that to me makes sense. So if you're risking, say, 1,000, you're going to make 2,500 on that trade. Again, you know, in general, you know, I'll just kind of share with you my risk management that I use is, in general, I like to do 0.5% per trade, okay? But if I was doing longer term trades like this, I would definitely increase that to at least 1%, okay? Now, you do want to have like a maximum of risk per month. Mine is 10%, okay? In other words, I cannot lose more than 10% in a month. So it doesn't matter how you do it, as long as you have that kind of like as a stop. So if you're down 10%, then you cannot trade for the rest of the month, okay? Decide what you're comfortable with. Obviously, if you're trading a really, really small account, you might want to increase these because otherwise it's just not going to be sustainable, let's say. But if you are just doing it to practice, then these numbers are good. So 0.5% is good for trades that you're going to maybe hold for a day or two. Anything more than that, I would increase the risk to 1%. So you're using bigger stops, bigger targets. In that case, I would do at least 1% per trade, which means that you have 10 opportunities. If you lose all 10 trades, then you're done for the month, okay? And you've got to find something else to do with your time, you know, maybe reviewing your journal and so on. Okay, so let's see if we can look at one more before we wrap up. Adobe's very, very much in the AI narrative. Again, I'm not a big fan of ones that are approaching their highs. You know, this is a real obvious resistance point. I think, you know, we'll go in and test this area here. So maybe short term looks fine to kind of trade. But other than that, I would kind of hang around a little bit. And again, you can look for maybe similar to some of the places we looked at, maybe a pullback. So you can see a really nice zone here of interest. So anywhere kind of in this zone here, where these moving averages are, where the envelope is, could represent a nice, you know, potential buying opportunity. And you can see there's a nice support there as well. So somewhere around this kind of 480 mark. Let's double check that. In fact, is that 480 looks pretty decent to me on this one. And again, you could keep it really simple and say, hey, I'm just going to target back up here, which is around 622. So buying at 480, target let's call it 620, and then again you could do the 2.5 to 1 ratio. You know, just looking at the chart, ideally you'd kind of want to be maybe below this here as a stop, but that means you won't get your 2.5 to 1 unless you went for a better entry, but in which case you may not get filled. So I think a 480 entry, 620 target, and then, you know, basically just put your stop where it can make sense still. So maybe somewhere around here. Okay, guys, let me know if you have any questions at all. If there's anything you want to ask me. I kind of want to leave you with some point of contact, and also, you know, just to kind of give you a little bit of advice based on my 20 years of trading experience. You know, the most important thing in trading is risk and money management. You know, all of the things that we just discussed there, using different indicators, moving averages, price action, you know, some of you guys will be able to do that. Some of you won't be able to, that's fine. But the most important thing is find a simple edge, something that's very easy to follow, something you can be consistent with, and then place your orders with the correct risk management. If you do that, and you can do that over time, you're going to be a very profitable trader. The difficulty is doing the simple things consistently, and that's what you need to master. So these webinar presentations are there to aid you, to help you learn, to educate you, to give you some inspiration, to allow you the opportunity to ask questions. So if you're getting value from them, please do reach out. If you want anything in particular you're interested in that you think will be valuable to others, again, please reach out. You've got all the different handles there, social media handles, the email address, you've got our phone number there. So please reach out directly to Capital Markets Elite Group. The team are great. They'll help you out, you know, with any feedback, any inquiries. You know, if you need help opening accounts or whatever else, you know, so you can go in and practice. You know, use the charts. You know, obviously it's great. You've got charts that are free. So, you know, you can start practicing, form your trade plan, and then once you're comfortable, that's when you can, you know, potentially look to, you know, go live and trade. Okay, guys, I hope that was useful. I hope you got value from it. And, you know, most importantly, I hope it was worth your time. Thank you for being here. Thank you for your attention. And I will catch you again very soon with another presentation. So I'm just going to leave up those contact details for another 30 seconds before we wrap up. Wishing you a good rest of your evening. Take care. Speak to you soon.